Welcome to the audience to the Blockchain SIG. Very excited to welcome Candice Mesk as a guest speaker. So the topic of the presentation will be to try and understand the shifting crypto regulatory landscape, and Candice will give us her insights into this very interesting topic. So it will be a question and answer type of webinar. But before we start, I'm just going to quickly introduce Candice. So Candice is a director of the Developer User Group. It's a not-for-profit community-led organization. She's the organizer of DevConf and works in a blockchain enabler for a local bank in the role of application development head. Candice is also a member of the IITPSA and has been invaluable in helping the Institute establish a DevOps SIG. So very interesting background. So welcome, Candice. How are you doing today?
Thanks, John. Thanks for having me and for that also very pleasant introduction. And also thanks for organizing these events for everybody's education. I think the role of community is very important in how we adopt in a safe way. So yeah, shout out to John for being part of this community and leading the SIG. Thanks, Tony, for creating the space for us all to have these conversations today. So I'm doing well. I hope you're all doing well too.
Thank you, Candice. I think in terms of questions, I'll just get straight into it.
Yeah, so much to talk about.
We'll start local, and I just wanted to ask about the position paper from that was introduced by the Reserve Bank. And in their position paper, they spoke about crypto asset service providers and the type of regulation that would be coming through on those providers because of their nature as financial institutes. Could you take us through some of them and how it impacts like ordinary individuals that want to, for example, purchase crypto on an exchange, and what sort of changes would that entail for them and impact you? Thank you.
Great question. So I think you're referring to the paper that came out probably a good 5 years ago or 6 years ago. That was by the IFWG CAR. Is that the one?
Yeah, that's the correct one. Yes, yeah.
Okay. So the IFWG is the Intergovernmental FinTech Working Group. And the CAR is the Crypto Asset Regulation Group. Now, these two work very closely together. And the SARB has quite a strong presence in that interest group, as well as other regulatory representatives. That paper informed the regulation that we have today. So very much of, I would say, the majority of what was written in that paper has in fact been absorbed, but there are also other recommendations that we haven't seen come into legislation. So the regulation applies both to the service providers of crypto assets, and it also applies to the activities that we as local residents can do. So when we look at how crypto asset service providers are regulated, they're regulated by the FSCA, and they have to be licensed in South Africa in order to perform the services of a CASP. We call a crypto asset service provider a CASP. Then on the what are we allowed to do, there are also different regulatory bodies that govern what we're allowed to do as investors, whether we're retail investors or we are business investors. Those regulatory bodies include, and I forgot to mention the FIC, the Financial Intelligence Center, also regulates the crypto asset service providers. Now, the Reserve Bank and SARS are two of the big regulators when it comes to what we as investors are allowed to do. And we can go into quite a bit of detail on that. There's tax, there's exchange control, but let's go slowly, John. So where do you want to start?
I think what the one area I'm interested in is foreign exchange control. I know that as an individual, you have this 1 million rand discretionary allowance. So if you purchase crypto, does that get off your discretionary allowance? Is that correct?
It depends. So it's quite technical, but it's also quite vague. Our exchange control regulations are way old. They're older than all of us, you and me. I can't speak for all the people on the call, but I mean, we're talking 1961. So that predates the internet and computers being everybody's pocket and everybody's household and just about everybody's hand. So they're quite old, and they certainly still need to come a long way for them to really give us proper, robust guidance on how we can use crypto. But what we have been told by the regulators is that yes, there is potentially an impact to our single discretionary allowances, but the way that those get invoked is when it's a cross-border transaction. So when we are buying crypto from a local exchange like a Valor or a Luno, we're not invoking our SDA because it is not considered to be a foreign capital investment of any type. When we want to move that crypto overseas, the exchange control guidance is very clear. You cannot, as a South African resident, take your crypto and immediately send it now to a wallet at Binance overseas. It's not in the rules. What you can do and what you must do is you first should be cashing that out. So you would take the crypto asset that you have, say you have 1,000 rands worth of Bitcoin, you cash that out into rand, you take that rand and you convert that into dollars or euros or wherever it is that you're wanting to send it. You send the foreign money overseas. That impacts your single discretionary allowance, or if you've made the application for the extra 10 million, you can also use your foreign investment allowance. But that is the guidance. So if you are sending crypto to an overseas crypto asset service provider, it is not following the rules, and there could be criminal penalties there. So once you are taking that and you're converting it into foreign exchange, then the SARB knows what to do with that. So the Financial Surveillance Division under SARB, that's called FinServ, they apparently claim that if you request permission to move crypto overseas, then if it's granted, then you're allowed to do that. But because they don't actually have the mechanism to report this in the same way that we report foreign currency transactions, that application will most likely get turned down, unless perhaps you're a big firm in South Africa that's licensed and you're doing crypto arbitrage, for argument's sake, then perhaps you would get that approval. And there are arbitrage companies in South Africa operating perfectly within the ambit of the law and within the ambit of the regulations. So that's all fine, but we can't just go ahead and do that. We've got to cash out first. So that's how your SDA or your FIA would be impacted. Then another way that your SDA or your FIA will be impacted if we look to the future would be that the way we think it's going, and this is not published, this is just what the grapevine is telling us, is that if I move crypto out of South Africa's borders, and that includes onto a private digital wallet, that will be considered expropriation of capital. In other words, we're externalizing, we're taking something that is local and we're moving it offshore. So we're expecting that there will be published guidelines coming in the next year or two that will make this clear. And we also hope that in that time that there are the reporting mechanisms so that people can actually participate in a way that they're not breaking the law.
That's perfect. Because that's very interesting because I just thought it automatically affected your SDA, but it's good to know that your local service providers don't.
Yeah, it can't. They don't have a way for the exchanges to go and report that.
Yeah. So when it comes to tax and SARS, like my basic understanding was that if I just buy and hold crypto, then it's not something you would have to declare unless you exchange it back to local currency, and then you'd have to declare it as a capital gains. Is that basic understanding correct, or is there more to it?
There's definitely more to it, and that basic understanding is correct. So there's no tax implication for buying and holding. You can buy as much Bitcoin as you want on a local exchange. And now what we talked about moving to a digital wallet that's your own, that would impact your exchange control stuff. The tax stuff doesn't work like that. So as long as it's not being disposed of, in other words, you're taking an existing crypto asset and you're disposing of it, in other words, exchanging it for something else, or sending it and giving it to someone else, or spending it. So holding is fine. You can hold away. And that's good news for us, I think. But the crunch comes when you are disposing. So that could mean that I'm giving it to you, John, because it's your birthday. In that case, then one of us has to be, one or both of us is responsible for the tax there, and we have to report that to SARS. When we are taking Bitcoin and we're buying ETH, what is expected is that the Bitcoin that we're selling, and this is so hard in a crypto world because we're dealing with tiny little fractions, but it's a first in, first out principle. So it doesn't matter how I'm buying Bitcoin every single month. The oldest Bitcoin that I have is what will be sold first or disposed first. So if that Bitcoin cost me 1/10 of what it is worth now when I go and change that into ETH, that's what I'm getting taxed on, is that gain, or in fact that loss. Now there's capital gains and losses is one part of the tax implication, and then the other is income, revenue. So SARS is not incredibly clear on this. They can't always give you exactly what the parameters are that define capital versus revenue, but they expect us all to be adults about it, and we all know that we have an intention. So for the most part, when I'm disposing of a crypto asset, I'm probably motivated by profits. I'm probably trying to make some money. But if I am receiving crypto as a salary, or it's my birthday, or I'm an NGO and I accept Bitcoin as a donation, all of that kind of stuff would be considered revenue or income. So it's taxed differently. With capital gains, there's actually a threshold of 40,000 Rand before tax is invoked, and there's a flat rate of 18% on the, I might have got it wrong. There's a flat rate of 18%. I'm probably going to get it wrong, so let me rather just not, I might have to share that on the chat afterwards. But you are also taxed no, I've got it, I remember now. 18% on capital gains or losses, and then revenue is taxed according to your normal tax rate. So depending on how much you earn per year. So that does matter. But on the capital gain side, that also happens when you spend Bitcoin. So when I go to Pick and Pay and I'm spending my Bitcoin there, that same first in, first out principle is going to apply. What was the Bitcoin worth, the oldest Bitcoin in my wallet, and what is it worth now as I spend it? And that gets taxed. So it's murky, but we're expected to be responsible citizens with our crypto, just as we are with our normal Rand.
Candice, I've got a bit of a trick question, but I hope you don't mind. Just I trade on a platform called Deribit, do options trading, but their base currency is Bitcoin. So if I execute the trade, it's Bitcoin, and whatever the results of the trade is, it's Bitcoin again. So it's not actually exchanged to another crypto or fiat. So that wouldn't be really seen as exchanging it into another currency. So does that mean I'm safe from tax, or do I have to declare the actual capital gains that I have earned from those transactions?
Yeah. Yep, that is taxable for sure. So the tax kind of definition of this is not that it's interest earned. So like if I put my funds into DeFi and I earn some yield, they don't consider that to be interest necessarily. They consider that to be revenue or income again. And I mean, some of us are doing staking where we're getting a staking reward every hour or every 15 minutes or whatever the case might be. Those rewards are taxable and they need to be declared.
Yeah, that's perfect. That's good advice, because I think, like for me, I'm always experimenting with different platforms, so it's very useful to know that this actually is taxable, and that I need to be more responsible in declaring it. Not that I'm not, but just a little bit more. Yeah.
If you never sell, you don't have to declare anything. If you don't do DeFi, you'll be fine. But there is actually a company, and there's multiple of them, but the one that you can find lots of videos online about is called Coinly, and they're integrated into over 100 odd platforms. All you're going to do there is you're going to generate kind of your API key and your secret from the exchange where you're holding your crypto. And from there, they can perform the analysis to determine your tax. And they know how to do this for several countries, which is quite cool. So they're already integrated with Luno as an example. So if people are using Luno, you can use Coinly to generate the tax reports, just to help you file your taxes, because it's quite a difficult thing to figure out manually, especially if you've got multiple interests like you do. That's much harder. If it's on your own private wallet, I think they also integrate with some wallets. You just send them an address and they can figure out your tax for you.
Perfect. I want to shift the focus to international, and in particular start with the USA. So I noticed, certain exchanges and platforms that I use that they quite specifically say that it excludes US citizens. And I was always curious as to why that was. Is that because of the strict crypto regulation? Is it because of this SEC, Security Exchange Commission? Do you have any insight into why US citizens are seen as no-go for certain exchanges?
I don't have a lot of insight into what happens in the US. I'm much more focused on what's happening in South Africa, but it does seem to me that the US likes to regulate the entities themselves and less so what the citizens are doing. So if they don't like the entity for some reason, they cut it off, and they put that ban on that particular crypto asset service provider. But I mean, that same kind of thing I think happens all around the world. The US is just particularly tricky, and with many states, and each of those states having their own set of rules and regulations, I think it's very hard to limit this state can and this state can't, and that's really tricky to govern. One of the biggest issues in the US is the long debate of whether certain crypto assets are actually considered securities or commodities. And there's two different bodies that govern each of those two things. We hope that there's a bill coming in the next few months. We hope that there's going to be some alignment between the two, because if somebody thinks that one type of crypto asset, and it might be a cryptocurrency or it might be something else, is a commodity, it's treated differently to if it's a security. And that's been the ongoing debate there. So they're seen as indecisive. And my opinion is they could do better to align, for sure.
Yeah, I think it's tricky for all regulators. And I think the other interesting development of the last few months is ETFs. That's been big news. Certain large financial institutes like BlackRock, Grayscale, so they're offering ETFs to their investors. Are these only for high net worth individuals? Is it regulated in that way, or can ordinary retail investors get into these large funds?
Absolutely, they can. They can. These ETFs were approved in January of this year. First, the Bitcoin spot ETF, and then a little later, the ETH ETF. And ordinary investors are allowed to access this type of investment product. The investment products are also accessible to other jurisdictions. So people in the rest of the world, depending on how they're governed, can also buy in. So, for example, on the Standard Bank app, if you're a Shift client, which is their Forex platform, you can go and buy the BlackRock ETF. I hope I'm not mistaken. I hope it's not the Grayscale one, but I'm pretty sure it's the BlackRock one. That's available to South Africans today to go and buy. We can't get it on the JSE. There are many reasons for that. Collective investment schemes got to come a little way first, but it's there. And I think that opens up a lot of accessibility to investors or to ordinary investors like ourselves that maybe wasn't there before. But it's very popular with institutional investors as well. So I'm seeing it as a very positive move, and it's also rapidly increased the market cap, which brings confidence to the asset class. And that also brings about a certain amount of stability, which I'm laughing at myself in my head because the price has been going all over the place the last few months. But this is a really exciting thing about the cryptocurrency, is that it gets all kinds of volatile before it goes up. So fingers crossed. That's my crystal ball moment for the day, is buy now. But there are some, there's pros and cons with the ETF. So it depends on what you're looking for, what your goals are, and of course what it is that appeals to you that's different from just going to an exchange and buying Bitcoin, because it is the underlying asset. Those ETFs are 100% backed by the actual crypto that they are indexing. So for every dollar, that there's $1 worth of Bitcoin in the backdrop to be able to provide that stability. And that's really important. They are regulated. So all of these, they're asset managers first. So, I mean, the number of trillions of dollars, I think it's very many trillions of dollars that are under management with a company like BlackRock and Grayscale. This is actually just a small part of their bigger portfolio. So they know how to do this. They know how to service these customers. They know how to stay within the boundaries of what's legally and regulatory acceptable. So that also is very, I think, very appealing for some investors. But now we are straddling this TradFi world. So can I buy that 24/7, 365? No, I can't. That is market trading hours, so it's going to be the same as the New York Stock Exchange hours. It's that kind of thing. Do I have direct access to the crypto underneath the ETF? No, I don't. As an investor, I'm placing my faith in the asset manager to look after that for me and securely custody those assets. They're using an external provider to do that. Those assets are not sitting on their own infrastructure. So how much do I trust this process, I think, is a really important question for an investor, because on one hand, you're taking away the responsibility from me to manage my own assets, but you're asking me then to put my faith in you to do the same.
Yeah, very important point. I think I want to move on to Argentina. I know it's a bit further down. So Argentina, I mean, the last time I looked at the country, and they had quite a few problems with hyperinflation. So what that meant for the citizens was that as soon as they get paid, they would try and exchange their currency for stable coins, for example, or some other crypto, just to try and lock the value in, because their currency was fluctuating so much. And I wanted to ask, I mean, from a regulatory point of view, and especially in terms of foreign exchange control, would a government want to control the use of stablecoin by its citizens? Because it may have an impact, and I'm not exactly sure whether it be a negative or positive one, but I think it is of concern to governments when the citizens start taking their currency and purchasing stable coins. And I don't know if you had any insights into how that would impact the stability of a country's monetary policy. But I think, like in Argentina, they don't really have a very stable currency. So I think for them, it probably doesn't matter. But I think in general, if citizens have to purchase stable coins, does that impact your monetary policy, your foreign exchange controls? I don't know. It sounds quite complex. Yeah. What do you think?
It is. It's very, very complex. If we broaden out, and I'll come back to Argentina in a sec, but if we broaden out, I think it was the International Monetary Fund it was in the last 12 months. They said that they think that the threat is still quite small, but that it is entirely within the realm of possibility that mass crypto adoption could disrupt monetary policy and financial stability. Okay, so the risk is managed, and it's managed mainly because there's been a lot of regulatory attention, and I think there's been, I think that it's been proactive by most governments and regulators. They've proactively stepped in to make the space clear and safe and all of those good things. And more than that, why monetary policy and all this financial stability and why we need to protect that is important is because it's things like taxpayers' money, it's things like national debt, it's inflation. all of this is this very symbiotic ecosystemic relationship. And if we are taking fiat money out of the system and we're not treating it in the same way as we would our normal money, that's when the threat creeps in. So if Argentina is taking a regulatory approach to how stablecoins are issued, how they can be bought and sold, what is taxable, what can happen cross-border, and they're handling that in a very proactive way, then the threat is contained. But for countries like South Africa, stablecoin is next on the regulator's agenda board. They've been working on that for most of this year, and we haven't seen anything published yet, but we've been told that that is their current focus now that they've regulated the service providers and all of that kind of stuff. And next is this, and the UK has taken very much the same approach. So if Argentina is taking the right steps to ensure that there isn't disruption to their economy as a result of people moving their money into stable coins, it can be okay. But if they're not able to manage money leaving the country or leaving borders, or it's all going and sitting on wallets and it's not coming back into the economy, that's going to mean low economic activity for them, and there will be consequences then. They will see further devaluing of their currency.
Yeah, that makes a lot of sense. Do you see the same thing with the central bank digital currency? Because obviously that'll be more controlled by government. So theoretically, that should be more stable in terms of monetary policy, because that's as part of the government policy. Is that a correct assumption for CBDCs?
Yeah. That's central bank money. So it's an alternative. And we do have digital money today, but it's not decentralized and it's not underpinned by cryptography. And that's the key difference. So a CBDC doesn't necessarily have to be a crypto asset. CBDCs can run on other type of infrastructure, but essentially, I think there would be no impact there. But in South Africa, we've done some CBDC projects. We're not going to put out a retail stablecoin, I believe. There's no talk of that. I think the CBDCs have much more potential in the wholesale space. Nigeria has one. They do have an e-Naira. The adoption rate is incredibly low. It's under 3%, might even be lower than that. Again, how much do you trust your government? So, and your currency. And I think that that's reflective.
Yeah. I think, like, from my understanding of crypto, a lot of people have said that, the biggest value that it would have is for the speed and of cross-border remittances, that ease of use, that speed, and also, the security, and also I think maybe lesser fees. I mean, from your knowledge of that area, do you find that the adoption is starting to increase, and are we finding that there's more regulation being placed on these cross-border remittance solutions? I think there may be a few crypto that are regulated and are probably thriving, but I don't have a lot of knowledge. Do you understand that area quite well, or?
We have to keep a close eye on it, because it's potentially quite disruptive to the traditional remittance solutions. South Africa, I don't believe, is big on remittance, but the rest of Africa, it's massive, right? Companies like PayPal, they do this very well, but we can't use their product here just yet. But it's been designed to do exactly that, to remit funds in a quick way at very low cost. On the continent, we've got companies like Yellow Card, Katani Pay. They are licensed in certain jurisdictions. Yellow Card's licensed in Botswana. They're licensed here as well. So they do fall under regulatory supervision, and they do fall under the frameworks. which is positive for consumers to know, because that gives them a certain level of confidence that their KYC processes are good, the anti-money laundering processes are good, they're following good principles around protecting their consumers' assets. So that's all quite positive. But Africa has always been a big remittance player, and it will continue to do that. So we got the mobile money outlets. There are also agents where people go and fetch their received remittances from wherever it's come. And crypto is really just opening up another window for that to happen. And I think the adoption's been amazing. I chatted to some of the people from Yellow Card not long ago, and their growth rates are phenomenal. So it's positive, and I think it's solving a real challenge on our continent.
Oh, that's perfect. So I think for me, that's the questions I had. I don't know if there's anything further you wanted to add that would enlighten our listeners, or any inside information you have for us.
No inside information. I'll ask the Bitcoin gods to send me some good advice. No, I think that covers pretty much everything that we spoke about discussing on the call, so we can move to questions. If you like, great questions there, John.
Sorry, there's just one more segment I have to cover before we get on to questions, because I always have to take the opportunity to speak. So I'm going to give a little monologue on philosophy of Bitcoin, and also whether regulation fits into that philosophy. So I know that's not your area of interest, so I won't expect you to contribute, but I'm just going to speak for a couple of minutes, and then we'll get into questions and answers. So I'm going to get right into that. So when we look at the introduction of Bitcoin to the world, it happened at the time 2008, when there was a subprime mortgage crisis. It was known as the Great Financial Crisis, and that created all kinds of financial chaos. And Bitcoin was introduced in response to this, and there's a lot of mistrust against banks, governments, because governments were bailing out banks, and banks weren't entirely responsible in their lending practices. So Bitcoin was seen as the answer, because there's no central authority, and it's purely software driven, so it's incorruptible, can't be censored. And that was the basic philosophy behind Bitcoin and why it was introduced. And now, as Bitcoin becomes more mainstream, we're starting to see the regulations starting to come in, especially now that the larger financial institutions are taking interest. We're getting ETFs. So the question is, does that go against the original philosophy of crypto? The whole idea is that you own your money, you own your cryptographic keys, and no one can take it away from you. And it goes back to very centuries old arguments about rights. If you look back at something like the Magna Carta back in the 12th century, so in that particular document, it was very clearly stated that the barons of England at the time had enough of their king and his pillaging of the countryside. The king would go out, he would take whatever he wanted, wouldn't pay people back for what he consumed. He would tax people. He would, if he wanted to prosecute someone, and he would do so and execute them, at his own whim. And with the signing of the Magna Carta, all that changed, and you had now more rights for individuals, the rights of people to be able to freely, go about the economic business, to get compensation for, anything that was offered by them as a service, and the right to their own property. And so that was an important landmark, because prior to this, kings had divine rights, and now all of a sudden your ordinary citizens now have rights. They have right to property, they have right to freedom, prosperity. And if we fast forward to something like the Declaration of Independence from the USA, 1776, and the Constitution, it also enshrines the same kind of thinking, you know, life, liberty, property, prosperity, pursuit of happiness. So these are basic rights that governments are meant to enable people to have. And if we get to the crux of the matter, it's about property rights, you know, the right of an individual to property, not only that they can use or make use of their own property, but they're able to prove that it's theirs. And traditionally, governments provide the role of helping people protect their property, because governments have the justice system, the police force, they have things like title deeds for properties, logbooks. So that enable people, so if they purchase a house, they have a title deed, and if someone tries to invade the property, they can go to the courts, they can go to the police, because there's protection. And in a well-organized government, that's what happens, and that's what people expect the government to do. So for many crypto enthusiasts, especially Bitcoin maximalists, they believe that, you know, one of your fundamental rights is your right to your own property, the right to own it. And when they look at money, what they say is that your government has the monopoly on money. They create it, they can print it, central bank prints it, controls it, and all kinds of controls over the use of the money. So in actual fact, even those ordinary citizens do have this fiat money in their pocket, they don't actually rightfully own it, because it's actually government money. So even though you can use it, your rights to that money can be violated quite easily as well. And it's happened in certain countries where government has expropriated bank accounts, etc. For example, Cyprus, or banks have said, okay, we're having a bank problem now, so you can't draw your money. So these kind of things are open to, you know, to governments sometimes trying to violate money property rights. But in the case of crypto, it's more difficult, because your crypto is secured by cryptography and the blockchain. So for many Bitcoin or crypto philosophers, that means you have inviolable property rights to your own money. And that's a very important philosophical point for them. So does that mean that we don't need regulation? Well, not exactly, because we do know that there's certain illegal activities, there's terrorist activities being funded by crypto. You know, we all know the story about Silk Road, illegal, you know, activities happening. They're all using crypto, and, you know, various other scammers out there that, you know, prey on people that don't have a high knowledge of crypto. So in those cases, regulation is necessary and is actually welcome to try and clean up the area. So I think for law-abiding citizens that, you know, that are not using the crypto for illicit activities, I think there's no clash between regulation and your crypto, because you can easily buy and hold your crypto, keep it in a hardware wallet somewhere, and, you know, no one's going to interfere with your rights to that money. And plus you have the extra protection of cryptography and the blockchain. So I think both can and should, you know, live together in an ideal world, because we don't live in a perfect world, and there's many activities going on that, you know, that need the regulation of government and other institutions, even though it goes against the original philosophy of Bitcoin. So that was my final thoughts on regulation, and even though it does get a bit philosophical at times, there is a reasoning behind why people are so, maximalists and have strong opinions about Bitcoin is because of these very basic rights that they're craving to have, especially their rights to their money, and that's why it becomes quite heated. But I think both can live together, regulation and the freedom to your money, and it's possible that we can all make it work, hopefully seamlessly in the future. So with that's my final word. So I would like to thank Candice for all the insights. It was very valuable and insightful. And I think, Tony, if there's any questions, we'll take them and then do the wrap up.
Awesome. Thanks, John and Candice. Candice, I'm truly amazed by your knowledge here. I believe I have a fairly good understanding of South African tax law, but not when it comes to crypto. So, and as you say, a lot of it is still under development and so on. And there's a question, and maybe that's the appropriate time. Patrick, I haven't missed your question, but Mishak, excuse me, Mishak has asked the question, which I think you did touch on in your in some of the parts that you covered earlier, Candice. He asks, how is the tax calculated on cryptocurrency investment in South Africa?
Yeah, thanks, Tony. My understanding, and of course I'm not a tax practitioner, but my understanding is that it's firstly based on your intent. So if your intent is to make profits on by disposing of a crypto asset, then they would treat that as capital, and it would be what is the Bitcoin or whatever crypto asset that you own. It could be literally anything, but what the oldest in your wallet is worth, or was worth when you bought it, and what your selling price today is. And that profit or loss is where the tax is calculated. If you're seen as a trader of crypto, so again, there's not clear guidance on how many times a day or week or month you have to be doing these kinds of buys and sells to be considered a trader. But again, you're supposed to be the boss of you and know what your intent is. Traders have to pay income tax on whatever they make when they're trading. So again, it's also the first in, first out principle. The oldest crypto that is in your wallet, the price that you bought it at versus what you're selling today. It's based on that. And then you've got that 40,000 Rand exemption on capital gains that if you exceed that, that's when you start paying tax. I hope that helps answer the question.
That's a great answer, Candice. I think certainly my own experiences are not in crypto, and I'm not a tax consultant either, by the way. But just a you were saying you're the boss of you, but unfortunately SARS may not necessarily agree with your own determination, and that's part of the challenge. Like you said, it gets a bit murky. So to my mind, one of the things maybe, and you can correct me if I'm wrong, would be tenure of holding. So if you've held an asset, whether it's crypto or otherwise, for a period of time, would most likely be more likely to track capital gains than to be trading. But obviously, as you say, if you're doing things regularly, now define regularly or frequently, how long is a piece of string, then the question would be, of course, or the likelihood is that it would be seen as you say, you are trading, selling, purchasing and selling for profit. It's the same with things, people who buy houses and flip them and sell them.
Yep.
It's a primary residence for a period of time, but if you're doing that every 2 or 3 months, they're going to think that you're doing it for profit purposes. But thank you for that. That's a useful answer, and I hope it answers Mishak's question. And then I just need to find, I've lost it. Here we go. Patrick asked a question earlier, and hopefully I'll interpret it correctly. He says, why are bank workers not allowed to use other trading sites other than their, and I presume he means their own? What's the reason behind this?
Yes, I mean, that's a general question that refers to stocks and shares and that kind of thing. And some of the reason for it is that as financial institutions, employees are also expected to behave in compliant ways. And that includes having potentially the insight into a stock or a price of a share that's going to change in one or other direction. And so by buying and selling shares on a platform that the bank has oversight into, they can make sure that their employees don't come under some kind of foul play or something like that. That's one of the reasons. So they can also control what employees can buy and sell. So we talk about close periods. Where I work, the financial results were released recently. We got an email on that day to say the close period has ended. You can now buy the first rand share again. So that's an example of why they want to keep you on a platform that they can monitor. Are you completely not allowed? I think that answer is it depends. Some of the financial companies, and banks included, will allow you, provided that you disclose. So they will expect you to produce the data of what you've bought, sold, where you've got it from, and your holdings. Whereas that's a lot of work for them. Is if everybody's sending them my Easy Equities report and here's my Ellen Gray report and here's all my stuff, I think that's much harder for them to protect themselves and their employees. So that's one of the reasons they do it as well.
Yeah, that's interesting. I worked for one of the large banks many years ago, long before crypto, those sorts of things were around. And I do remember that the fiduciary governance on employees was very strong. And a lot of it was written into your employment contracts that you behaved in a certain way. And one of the things that struck me, as I say, I'm talking like 20, 30 years ago, was that you weren't allowed to gamble. And that was, and I mean, today we would define gambling as lotto gambling. I'm not going to go there. But the point is that there were, certain, what can I say, ways, behaviors, whatever you want to call it, that were approved and that weren't approved. And I mean, to the extent that you could possibly be fired, let alone held for any kind of, misconduct. So very interesting. Thank you for that. I see another question has come up from Leroy. Thanks, Candice. So Leroy asks or makes a statement, excuse me, I'm a decentralized app developer. I sometimes participate in hackathons on various blockchains. Usually we are paid in the crypto assets of that blockchain. From a tax and AML standpoint, what do I need to do in order to stay within compliance? Good question.
Very good question. Firstly, you need to declare that as income with the revenue services. From an AML standpoint, I think the AML responsibility falls mostly on the crypto asset service providers. So where is this crypto being sourced from? I think it's in your interest to know that, but you wouldn't be ultimately responsible for that part of it. But it's generally that the crypto asset service providers are running anti-money laundering software, and they're identifying all their customers, and they're also able to identify counterparties. So when crypto is moving into their ecosystem or out of their ecosystem, that's all being analyzed on a real-time basis. So if crypto enters an exchange ecosystem and they're looking after customer assets, and it turns out that that's come from a country on a sanctions list, or it's come from a known criminal source, and these criminals open up wallets all the time, but the software is very good. It bundles together in some instances. It'll know that a series of addresses are associated with a particular financial crime ring or something like that. So AML is not especially your responsibility. I think it's important that we all know about it. But the main thing would be that you're declaring that as income, and that you trust where it's coming from. That they're not doing something funny to acquire those funds and then you receiving them ultimately, because I think none of us want to be in that end-to-end chain anyway.
Thanks, Candice. And while I don't see others, I've got a quick question for you, if I may. Just sort of following on from that, listening to certainly your wealth of knowledge and John's as well, excuse me, this is quite a difficult area for your average Joe Soap, who's maybe sort of dabbling a little bit in crypto and saying, well, what do I do with this and where do I declare and so on. Are there any kinds of specialists that can give advice to the average individual beyond just a tax consultant? And as you say, particularly as the tax laws are not always necessarily that clear, are there people who specialize in giving this kind of advice to individuals?
If we're talking about financial advice, I think it's really important. Yes, there are, but those people have also got a responsibility to be licensed. So very importantly, I think if you are receiving the services for crypto specifically, and it falls under the category of advice, that needs to be a licensed individual or a licensed company where that individual has gone through the various exams that make them fit and proper to dispense of that advice. So that's really, really important. They're blockchain training companies. There are quite a few, and they offer services to corporates as well if you want to mass train staff at work. And I think this is going to become really, really important. It's going to touch many of our jobs. So I think that move is critical, that education is a very important step. There's free training if your company has a Udemy subscription or something like that. There's many, many courses that you can do. And then also on YouTube, there's tons of stuff. So like Binance Academy is a great source of learning, and it goes all the way from intermediate or from beginner to intermediate to expert. So you can really just absorb a lot of that content quite freely. And I think it's ubiquitous now. So that's the really nice thing is in some years back, if you wanted to try and understand this, you were trying to gather as many disparate sources of information as you could and figure out what order to consume it in. That's very hard. Then on the formal side, there's university courses. Cape Town University's got some good stuff in the fintech space. Oxford runs a really good blockchain course that runs over 5 or 6 weeks. It's quite expensive. It'll be something in the region of 40,000 Rand. I've personally done that course. It's really, very good. And then the University of Nicosia is a great source of both paid and free learning opportunities. This UNIC, because it's University of Nicosia, so they call themselves UNIC. They run these things called MOOCs, free MOOCs on digital assets, sometimes on DeFi, and they usually run 1 or 2 a year. So that's a really great way to get structured knowledge on a topic that's being taught to you by people in academia whose job it is to make sure that what they're sharing is appropriate for your consumption and also accurate and up to date. So there's many places where you can go. I think it just depends on what it is that you are, what your goal is. What is it that you're trying to achieve? I don't know, John, have you probably also done some learning? Maybe you can chime in there.
Yeah, I've done quite a bit, but I think it's very much online. So I used to use Coursera quite a bit, just various universities offer blockchain courses. But it was more on the technical side. So I used to enjoy doing those, cryptography, maths. I used to get onto those, but not on tax.
Sure. Leroy's sneaking in a question here, Leroy. So we've got less than 2 minutes. Would you mind taking another one, Candice?
Computer assets that are earned through computer gaming, the in-game currency that is sometimes traded for fiat currency. My guess, and I think this again would depend on jurisdiction. So games are one of those things that also don't live in a country necessarily. But if we look at it from the South African context, as long as that token is living inside the gaming platform, you don't have to do anything. When you cash it out, if it's, I suppose again, if that's considered income or capital gains, you'd have to probably get some advice on that. Because I don't know how one earns these tokens. Are they in exchange for goods or services? Are they even airdrops? I mean, some of you may be familiar with airdrops are theoretically taxable. Somebody chucks something into your wallet and that thing is worth some amount of money a year or two later. Like, even though you got it for free, you didn't buy it, you didn't ask for it. It's potentially taxable if you try and check it out. So I would think that the gaming tokens would be subject to the same. But that's probably something that... There's really good tax companies in South Africa that can give you advice on that, that specialize in this stuff.
Awesome. Candice, thank you ever so much. Really, and I mean, the hour has absolutely flown. So really, very interesting. Thank you both. John, any last quick words of wisdom from yourself?
Yeah, I just wanted to thank Candice again. You definitely have made a very positive impact on the blockchain SIG, so we will remember you forever. So thank you. And it's not just because you spoke about regulation. And so I hope you have a great evening, and the same to the audience here. Thank you.
Thanks so much.
John.
Thanks for the opportunity. And keep up the good work on the SIG, John.
Thank you.
Thanks,
Thank you,
Tony, as
Candice.
always.